Hello friends. First of all, happy Republic Day to all my Indian friends. Nowadays, we are observing there was a sell-off in stock market, Indian stock market as well as US stock market. In this video, we'll understand the reason behind it and as an investor, what we have to do in this situation. So friends, be connected with this video because at the end of video I will reveal some themes which will perform better and what we have to do. The main reason behind this sell off is announcement by chairperson Mr. Powell. There will be rate hike and tapering in next upcoming few months. Now what is tapering? Because many people don't understand what is tapering. To understand the tapering, we have to go in near history. So what happened because of COVID-19 pandemic, there was a lockdown in US and worldwide. And because of the lockdown, there was an economic slowdown. So US Fed decided to infuse liquidity in economy. It is called quantitative easing. So to boost the economy, and to do that, US printed currencies and infused in the economy by purchasing treasury bond from the open market. And because of this action, there was a huge liquidity in economy. Also, there was a decrease in interest rate. It boosted the economy and now economy is performing well. But as a consequences, there was a hike in inflation. Right now, there is a 7% inflation in US economy, which is around 40-year highest. Also, unemployment rate is 3.9% and just before pandemic, it was a 50-year lowest unemployment rate. US Fed initially ignored this inflation. They thought that this is a transient, but later on they understood that it is not transient, it is a permanent inflation. And now they are in rush how to handle this situation. So US Fed announced tapering. What they will do in tapering? They will reduce the speed of liquidity infusion in the economy. So in layman language, they will pull their leg from the accelerator. Not only that, they will also press the brake, like they will increase the interest rate hike. Some economists believe that US Fed is already too late to handle this situation, and some believe that US Fed will go aggressively in near future, and this is the concern of stock market. They will increase the short-term interest rate, and because of that the borrowing cost will be higher for consumers and for industries. Now what are the challenges for the Fed? So this inflation is not driven by the higher demand. This inflation is driven by the congestion in the supply. Now what is that? So there are the main two causes for the inflation. One is a demand driven and another is a supply driven. Demand driven inflation is easy to handle compared to supply driven. Economists don't believe that the increase in interest rate hike, Fed will manage the inflation, and this is the concern, because if Fed will not handle the situation properly, it will bring recession. Now as an investor, what we have to do? Don't go aggressively, play defensively. In recent past, we all experienced that everything performed well. Whenever you invested, whichever stock, it performed well. But this will not happen in near future. You have to invest in good quality company. The management should be good, the business quality should be good, and the valuation at reasonable price. Don't invest in crazy valued startup stocks and avoid momentum stocks. Asset allocation is a key to manage your portfolio. When you invest in fixed income, prefer short-term debt bond and floater bond. Now, which theme will perform in this situation? So first of all, the return of stock market will not extraordinary in upcoming time. In this situation, selective stock or selective company will perform well, which has a low leverage, good management quality and good business quality. The theme will perform like FMCG, consumer products, communication and at some extent real estate also. Thank you friend. Don't forget to press subscribe button and bell icon